Welcome back to Tax Talk with Hey Hey, where we offer simplified tax planning and mentorship to help 6 and 7-figure CEOs ditch the daily hustle by achieving financial independence from your business by increasing your purchasing power and diversifying your source of passive income. Through financial mentorship, realistic goal setting, and simplified tax planning, without having to hustle for the rest of your life, with the guarantee of the optimal roadmap to move you towards your desired time freedom. Hi, welcome back to Tax Talk with Hey Hey. I am your host, Suhey Piedra with Prominence Business. We're located here in Glendora, California. And today I have the pleasure of having my dear friend who's a mortgage lender who I love dearly, Eliana. Help me with your last name.
Eldami.
That's not what it looks like when you see it spelled out.
No, courtesy of my husband.
So, Eliana, tell me a little bit personal about yourself. Tell the audience how cool you are. Share with us your personality that's going to shine through. Even the audio people are going to see this.
Well, appreciate you having me and inviting me today. So thank you so much. It's a pleasure being here. So you mentioned my last name. So I'm happily married of 7 years to my Egyptian lover.
Yeah.
Been together 9 years, but married 7. I'm a proud Mexican American and have 2 cats. And in my spare time, absolutely love to karaoke. So I think you know that, but so the audience knows we're a fun bunch. So.
Yes, for sure. Never a dull moment when she's around. So she makes mortgage lending even funner, I think.
I'll try.
That's awesome. So, how long have you been doing this? I mean, when I met you, you were already doing this, but how long have you truly been working in the mortgage world?
So I have been in the finance industry since 2008.
Okay.
So
Perfect
about
year to come in.
Perfect. Literally. So I went through that amazing financial crisis of 2008. So that I basically about 15 years into the finance industry, and I started in banking and then just grew my passion for credit and lending, and then just went head first into my passion for helping people become homeowners or real estate investors.
Yeah. And when I first met you, I think it was at a networking event or something, and you were working for a bank. But you've always been very knowledgeable in the whole, like you said, credit and interest rates and all that other jazz stuff. When you officially became the person I can go to for mortgage lending stuff, I thought you had been doing it for, forever, but you transitioned into that world.
I did. I transitioned. So I just really fell in love with, credit, as I mentioned early on in my financial industry career. And it just translated into a passion with creating plans for clients. I know it's Financial Literacy Month, coincidentally, but I did practice a lot of financial literacy at the bank with my clients, and I fell in love with business owners. And then it just transitioned over into just really a passion for credit. And then that spilled into lending because those go hand in hand.
Right. So talk a little bit about that. I mean, the majority of our audience are, entrepreneurs. I reach out to you because I tell you I have this client who, we've got to get them into their dream house or the goal of eventually owning something, but it doesn't just happen automatically because they need to be educated.
Yes.
And so you talk about financial literacy. What does that entail? Like, what do you mean by that when we have an individual who just started their business and says, oh, I want to buy a house?
So I can never assume, and this goes to say, and I'm sure you can agree, I can never assume that they know what we know. And I think that's the first step, right, is basically finding out where they're at and what do they know. And then from there saying, okay, what is your goal? And then I tailor a plan around it. So if I have a business owner that's like, hey, I'm in a lot of debt, but I want to buy a house and I need help qualifying, where do you think you're at? Well, last time I checked, my credit's like this. Last time I checked, this is how much debt I have. And I'm like, oh gosh, they're already telling me their scenario. And I'm like, But immediately I'm able to say, okay, I know how to attack the plan and educate them on the how. And I think that's the main thing. A lot of people don't know the how.
Yeah.
They're like, hey, I want this, but they don't know how to get to it.
Right. And there's not a lot of people that they can reach out to that will explain that to them. Most of the time when I get a client that says something similar, they already presuppose, oh, I know, but I don't qualify right now. Well, why? Well, so-and-so told me that I just don't qualify. But why? It's like, let's fix this. Let's line up all of your ducks in a row so that when you have the down payment saved up, you've cleaned up your credit, you've paid down your debt, you've have strong financials, your business is doing great, that there's no reason why you'll get denied. A lot of the times you run into people that say, well, my credit's great, but your debt's not. So here we go, 2 years waiting down the line because you got to pay off that debt. Or they say, I have great credit, but I don't have the down payment. So now it's like these little things. And I feel that instead of it taking 2 years to get that property, now it's taking you 5 because you've had to start all over so many times to get those, to work through all those little hiccups, all those little challenges and stuff like that. But tell us a little bit about your industry. Your industry changes on a day-to-day basis. How do you keep up with all of that?
So as far as it changing, you're absolutely right. It changes day to day and sometimes even middle of the day with, Fed rate hikes. I said it. I said what I said. So just the craziness of our environment in the finance industry right now, but specifically with mortgages has just been crazy. Just handling it with clients, I think, is a day by day. It's a day by day, case by case, because not every client is impacted by the changes around them. But I would say majority right now are feeling the impacts.
Yeah.
And so it's just really coming from a place of understanding. I think that's one of the main things, and just being there for clients and hearing them out.
Yeah.
Because we have to remember we're all human, and a lot of the time just saying it's going to be okay, let's stick to the plan or let's adjust your plan will help us get through the next day.
Yeah. And interest rate hikes are scary, right? But it's industry that has these cycles. So we were not going to be low forever. This was a norm before we had those low interest rates. And when my parents purchased their house, they were like 13%. So we're not even there yet. Do you know what I'm saying? So I think that looking at what historically has happened, where the interest rates have gone up and down, we were at historically low rates that we had never seen before. And now that's all we want.
That's all we want.
In reality, was that really a norm? I don't know. I think that we were going through something in our economy, in the financial world, that had us at those low rates, but things change all the time.
All the time.
Our economy needs to have those fluctuations to keep the health that it needs to, continue to function. So interest rates get affected, like you said, on a daily basis, and we see them go up and we see them go down. What we need to focus on, in my opinion, is our goal, right? What is our goal? Whether interest rates are high or low or wherever they are, if you still want to be a homeowner, then to me, let's focus on that. Let's clean you up, right?
Let's clean you. I can only speak to myself and my team. And what I can truly say is our focus is, what is that end goal?
Yeah.
And then we focus on the how or what that's going to look like, and let's just stick to it. Again, things do change daily, so we may need to adjust the plan, but that doesn't mean your whole goal goes into the trash can.
Right.
For a change in the industry. Things are going to come up because it's life.
Yeah.
And it's really, really hard sometimes for clients to not, it's very easy to not be flexible and focus on the negative. Right now, there's so much negativity happening.
Yeah.
But why not focus on getting your goal and make something for yourself? I always have to remind not only myself and my clients, right, but those around me that it's like, okay, well, let's pause. Let's take a deep breath, because that's the first thing, right? And then say, okay, what can we attack first? And then slowly we peel back the layers again and we're back on track. So to your point, yeah, everything changes constantly, and rates were at one point 13%. My parents in the 90s, early 90s, being Hispanics, were rate gouged because there was a whole lawsuit for that. And, they were paying over 13% when they bought their first home. So did they do it? They did do it, you know, and they muscled through it. And I think homeownership is a privilege.
Yeah.
Real estate is a privilege.
Yeah.
You have to work for it.
No, I agree. And we just deal with whatever scenario we're in at that moment and make our plans work around it, right? And a lot of the times right now you're listening to people say, if you want to be a homeowner or you want to buy rental properties or whatever, that's the end goal. Interest rates will change and you can always refi in and out of them, right? But that property may not always be available at that price or in that location. Because that's what we find right now is there's a shortage. And so now that's another thing to deal with, right? So,
yeah, that's crazy.
To think that there's not enough homes for the individuals or certain areas that you want a property in, and it's so difficult to get it. So
it is. There's a lot of coveted areas and short supply.
Yeah.
So you have to be flexible, I think, right now more than anything.
Yeah, for sure. I agree. So the self-employed individuals, what do we mean by strong financials? We talk about the plan changing and all that stuff. Self-employed individuals, I think, struggle the most in understanding, that lenders need to see a certain pattern or they need to see certain strength in their financials. Can you give us a little bit about what that means?
Absolutely. So with self-employed clients, I don't want to say it's tricky, right? But I want to definitely say there's extra steps that we need to be aware of and get ahead of, right? So I always tell my clients, if we're planning on buying next year, let's talk now.
Yeah.
Especially if you're self-employed, because we need to make sure your tax returns, right, are okay for the income needed to support you in that pre-approval for you to get a home, And I think a lot of the time people just say, Suhey, make it the least amount that I can pay. They forget, well, that's not helping you, it's hurting you.
Yeah.
So you may have to sacrifice. I know people hate that word, but sometimes we need to sacrifice, right? By really looking at the goal in mind and assessing the situation to be prepared for you to purchase that home. So a lot of the time self-employed, individuals or company owners, business owners think it's okay that they're writing everything off, where I have to kind of bring them back and say, wait, fall back. We got to look at this again. We wrote off too much. There's only so much I can add back in depreciation to your income for this year, that this is what you're only going to qualify for. Right. Now, I get a lot of self-employed business owners that are like, okay, is there another way to qualify? And the great news is there is. We can do bank statement loans. We can do stated P&L. There's lots of other alternatives to buy you time until next year, when we can get your taxes in place to refinance you out of that particular type of loan. But in general, there's lots of options and solutions. It's just all about talking about it up front.
And seeing what fits the client the best.
Oh, yeah.
Right?
Absolutely.
So when we get clients who are self-employed, the majority of the time, they have this idea that because they're not W-2, things are harder for them. In reality, it's because there's no tax planning. The W-2 people are paying just as much taxes, if not more. It's just that it's being taken out from their paycheck on a, bi-weekly basis. So when you're self-employed, they go the whole year without thinking about taxes until tax time. Yes. And then they get presented this beautiful bill and they're like, whoa, I can't afford that. And that's because there was no planning done. Yes. And therefore they were never on a payroll, or they were never being good about making those small increment payments throughout the year that would have added up to the same number had they been pre-planning. So when we deal with clients that their end goal is to buy this house, or they come to us and say, look, I'm tired of working and working and working and having nothing to show for it in my business, it's like, hey, it's time to start acquiring assets. But in order to acquire assets, things have to change. You've got to be prepaying your taxes. You don't want to have the IRS as your biggest creditor or debtor, whatever you want to call them, on you. Yeah, like you don't want to owe them money, right?
Bane of your existence.
Yes.
I can keep going.
You want to make sure that all of that stuff is lined up ahead of time, so that when the time comes and you find the property, you have the down payment, everything else lines up, that the IRS is not this looming thing that you have this big IRS bill for. And so tax planning is what we always tell clients is, let's just plan on making those payments as throughout the year, so we're not presented with this huge bill at the end of the year. Because believe me, the W-2 earners, they're paying a lot more taxes most of the time. Yes, high earning individuals, pay a lot of taxes, and they don't get to write off a lot of the stuff that the self-employed individuals do that they use for their business to grow. And so it's a little bit more challenging, but it can be done with a good team, with the good people behind you that are working all of your stuff for you towards that goal. You know, together with the proper team, I think it's all doable.
100%.
Yeah.
I think it takes a village, as
Yeah.
they say, right? And so it truly does. It truly does, because like being alone on the boat with no oars to row is going to get you nowhere.
Yeah.
So you need your oars, which is going to be the team behind you, to get you back to land. And so I think a lot of the time people are just, I want to say almost scared, ashamed, embarrassed of their situation. And that's something that I really, and I think even with you, Suhey, where we're like, it's okay. You've heard it all.
Yeah.
We're going to help you through this. And guess what? We're going to help you hit your goal.
Right.
So I think for me, more than anything, it's just a transparency, being honest. Being honest will get you through it.
Yeah.
It's just maybe a little bit of rough surf, but we're going to get you through it,
I agree. I'm big at telling the clients sitting, behind, and no matter what client walks in, they could have pulled up in the nicest car, have the nicest purse, have the biggest house. When they sit in front of me, man, I'm just like, I don't want to be like you. You know what I mean? But it's just like, it's this image that sometimes we believe that because we have this shame over our finances that we think that others have their shit together. Excuse me, their stuff together.
We're comfortable like that. Yeah. We're comfortable. Just bleep that out.
No, it's true. It's people
true.
do not have their finances in order. So don't feel shame over that. Instead, seek the right professionals behind you that will help you. And that's the main thing is I wanted people to feel comfortable to go after the right team to help them get to where they need to get to. I think that that's going to be the biggest key and the biggest takeaway is to have a team because you don't have to do it alone.
Amen. Preach, girl.
I love that.
Preach.
Okay, awesome. So now touch base about, is buying a primary the same as qualifying and buying a rental property? I'm big on rental real estate. So how does that work?
My rental real estate queen over here. Oh my God. So, and I absolutely appreciate the referral business, and clients always tell me how passionate you are about it. So there is a difference, right? There's going to be a difference in where you're going to want to buy, but almost to the T of it's a different qualification. It's a different set of rules when we're going to go for a rental property versus your first or primary home. So it is different. It's also going to depend if you're renting your current home. It depends if you have multiple properties. There's so many caveats to it, but the end goal is I'm going to help you get that rental.
Would you say, and I know that there's so many variables, but would you say that it's harder to get a primary residence than it is to get a rental property?
There is different ways to attain rentals that require literally no income, and I don't care about your debt to income ratio, which makes it easier, just going to cost you more, right? Versus the longer route, which is traditional and conventional, which is putting down 20%, which costs you more money, but your payment's probably going to be lower. So it's a yes or no, depending on the client's scenario and situation. We can go super easy. It's just going to cost you more out of pocket. Or we can go the longer way, which is going to cost you more up front, but makes you more cash flow through the months. So it's really going to depend. In my opinion, either way, we're going to try to make it as seamless as possible.
My opinion on that is it's easier because of the emotion.
You already ripped the Band-Aid once? Is that why?
I just feel like when you are going after your primary residence, like this is like what you consider like your dream home, where you want to put your family. You're looking at so many things that you probably shouldn't even worry about. Like you could change the doorknobs if you don't like them. You know what I mean? Like just like little things.
Tell that to all the first time home buyers out there.
Right?
Please make that clear to them on my behalf.
So that's why I feel like when I deal with clients that are trying to go after their primary home residence, I feel like it's just, there's so much emotion in there that it makes it challenging that they're not seeing a clear picture versus when it's a rental property, they're more like business oriented. You know what I mean? Like, I just want this property because I want to build my assets. I want to cash flow. I want to have a property in this location, whatever it may be. So I feel like there's a different type of an emotion tied to it than there is when it's primary. And when I have to deal with people in their primary, it's like they feel so defeated sometimes that it's like building up their spirit and saying, no, you're gonna be a homeowner. Like, I see this, we're gonna manifest this.
Yes.
And dealing with the rental is more exciting. Like they're like, I can't believe I'm going to have a rental property or an asset or whatever. So it's like I feel like it's a different type of an emotion. I don't know. What is your opinion on that?
No, 100%, 100%. If you're a first time real estate investor, you know, they're holding on to their pants because they're going to pee themselves because they're like, oh my God, is this the best decision I should be making? Am I going to make any money off of this? Is it going to get rented right away? I think that's more their concern is if they're going to make money from it. But the property type, they're like, yeah, that'll be fine. And to your point, they're kind of like, yeah, this will be easy to rent out. Someone can live here. But I think more than anything, once you rip that Band-Aid to your point, they're like, let's do this.
Yeah.
You know, they've made the decision that they're going to become real estate investors. They're going to go full force. They're not turning back is what I'm saying.
Right.
They're they're going to go forward with it. And they're making that decision to become real estate wealthy.
Yeah. No, I agree. It's just, it's interesting to see the difference in the clients. And so I observe that and I'm like, oh, you want a real estate property, an asset or a rental property? Okay, this is this is what you got to do and how it's got to be done. And the emotion is so, it's just different in my opinion. And so I love seeing that. But talk to me a little bit about, in the changes that have been happening lately. Can you touch a little bit about what that means for credit, for the people with good credit, bad credit, and all that good stuff? Or
Sure. I think I know what you're referring to.
I don't want to say good credit and bad credit. It's higher credit and lower credit, right? Because
that's what we're referring it to now. Yeah, we don't want to discriminate.
No, I don't want to say bad credit.
There's no such thing in my opinion.
I don't think that there is.
You can fix anything.
See, this is why she's my gal.
Exactly. You can fix anything. And again, as you know, we've seen it all.
Yeah.
I've lived lifetimes of bad credit before myself, and I'm okay to say that, and fixed it. And we've all been there. Some of us are not. You're just not gonna feel as comfortable to share.
Right.
Right, but is it fixable? Absolutely. Currently, as of May 1st, there has been loan level price adjustments implemented. So basically, it's a giant algorithm that was implemented into Fannie Mae and Freddie Mac's system, where when we run a client's information, it shoots back out if they're approved or not, and what's required for the approval. Long story short, there's this huge myth out there that the lower the score, the better it is now, and now we're screwing over the people with higher credit that make more money. Yeah. I just want to dispel this myth that is false, and I have a live case scenario currently as a live escrow where I have a client that has, let's say, less than perfect credit, but is still credit qualified to buy a home. And it does require for them to have more skin in the game. So we did not get a system approval. So it actually is making it harder for them to qualify that have, let's say, less than perfect credit or some blemishes on their credit versus the people with higher credit. What has happened is someone that has the lower credit score, it's just making it more affordable on their costs on the loan to make it a fair playing field for those that do make good income, but they've had credit challenges because, as we all know, life happens.
Right.
And that's really what they balanced out. But in order to balance it, they made it tighter for them to qualify on paper.
Okay.
Just cheaper in cost to match those with higher scores. So it is a little bit challenging right now. There's just ways that we have to work through with the clients. And again, there's always a solution.
Yeah.
Always a solution.
And that's what I like. There's always a solution. There's, just to have to work around it a little bit different, but there's always a solution, right? And so it's just working with the right people that are going to guide you to what that solution is. Whether you have lower credit, higher credit, or whatever your computer spits out. Because
Fannie Mae, Freddie Mac, I just want to make that clear.
Well, because people will come in here and they'll be like, what do you think? Do you think I'll qualify? And I was like, it doesn't matter what I think. You know what I mean? Like, it's what the expert's going to think. And I always say you need to have a mortgage lender on your side kind of guiding you to tell you what to clean up. I always tell them it's like painting a path. You painted it, but you're not the expert. I'm not the expert. And so the expert comes in and is like, oh, you painted it a little bit to the right, a little bit to the left, therefore you still don't qualify. And you did all that work for, I don't want to say no reason, but at the end of the day, now you still have more work to do. Yeah. Versus if the expert tells us exactly the path that we need to, paint, then we're following those steps with a sense of direction and to get to that goal.
Yeah, we're creating a map and a compass.
Yeah. So, Eliana, tell us a little bit about what sets you apart from all of those other mortgage lenders, and what do you do that you feel is different and, for your clients?
Gosh, I do love that question, but it's a loaded question. As far as what sets me apart, I really do pride myself in coming from the heart with each client. Mm-hmm. So each client is going to get a tailored experience, genuinely, not just from myself, but from my team.
Good.
So and my team knows we are like family, okay? And I work for an amazing organization, my broker, which is Viewpoint Lending, and they are just heart-centered. Mm-hmm. We have a slogan, which is mortgages done differently. And the reason is because each mortgage is truly, truly done with the client's, best interest in mind,
Awesome.
Heart-centered. We'll fight for them, even though sometimes it's more of the agent to do it. We're fighting for them. We represent them automatically. We're their loan attorney. And we're like, no, whether it's with underwriting, the agents, the property, we're in the battle with them, from pre-approval to escrow to handing them keys, and I truly do feel that does set us apart, because a lot of the time people are treated like a number, or, hey, you qualified for this, that's all you qualify for, which is not true. Mm-hmm. Sometimes clients are also denied, right? I like to tell people that I take on the complex and the challenging, because those are what I called a lot of lenders rejects, quote unquote, but they're actually qualified clients.
Yeah.
And to me, those are the ones that are my passion, where I'm like, it's almost like a challenge, right? It's like challenge accepted.
Yeah.
I'm going to qualify you. Yeah. We're going to make it happen because they have the money for it, or they have the credit. We just need to find a different, avenue or loan program. And my team is very versed in the regular traditional lending world and what we call non-QM.
Yeah.
So that's another thing that sets, myself and my team apart. And I think the last thing is that we help everyone. Yeah. So we can basically lend all over the United States, with the exception of New York and Alaska currently. And so we are not afraid, if someone's like, hey, I want to invest in Virginia. Hey, I want to invest in Ohio, your favorite. We're like, let's do it. Yeah. We're there for you. We'll pretend like we live in that area. They're not going to know we're not from there, but we want to make sure that we meet eye to eye with everyone on the team there and represent our client. So we truly take each client as family, right? And then we also make sure we just literally dot our I's and cross our T's to make sure that we've literally turned every stone to make sure that we can approve a client and for the max amount.
Yeah. And that's, so Eliana made a point. She takes on some of the most challenging cases. It's true. I work with many mortgage lenders. So, there's clients that already come with, hey, I know a mortgage lender, or maybe their real estate agent referred them to a mortgage lender. It doesn't matter. I work with whoever. It's for, at the end of the day, it's for the best of the client, for them to get the primary residence or the house that they're trying to get. So I work with them, but you'll see the difference. You'll see the difference in the passion that Eliana shows the client, in the way that her brain thinks, I think. And she's like, oh, we can't do it this way, but there's this other lender, or there's this other, loan, or there's this other whatever. And so I love that, because it's not a hard no. It's always this one's a no, but there's this other way. Or if we just wait and do this and, wait another whatever to start to clean this up or whatever. Like, she's so good at giving us a direction and giving the client that hope of saying, maybe I can't do it today, but if you wait 2, 3 months, 6 months down the road, you'll be able to do it. And that's what I like to hear. It's, don't tell my client no. It's like, give us the reasons so we can clean them up and continue to move forward. So 100%. I really do appreciate that about you. And no matter, she mentions this, if you want to buy in another state or whatever, I like that she takes the time to really help structure what needs to be fixed so that the client can, at the end of the day, achieve their goal.
Absolutely. It's very true. And I'll take on the challenge.
Yeah, I love that.
I'll take on the challenge, The ones that are said no to, I'll take them all day long.
So what advice would you give, someone out there that's considering buying or selling right now in a market where everyone's like, halt, you shouldn't buy. Halt, you shouldn't sell. Halt, geez, what are we supposed to do?
I get asked this all the time. Is it the right time to buy? So for those that are buying, my best advice is this. If you can afford it, go ahead and buy it. Rent is only going up.
Yeah.
I've never heard of rent going down.
Yeah.
Okay, you're paying 100% interest when you rent. So my 2 cents is if you can afford the payment, go ahead and buy. Okay, if you're selling, best advice before you put that house on the market that you meet with your agent, your tax person, and loan officer. You need to know what is the implications of you making money off this property if you make any, right? And what are you going to do with it? Are you planning to reinvest? Whether it's real estate, stock market, I don't know, IRAs. What are you planning to do?
Pay taxes.
Pay taxes on it at minimum, right, Sue? Yeah. So it's like that also requires planning. You just don't jump in the pool and then if you don't know how to swim, expect someone to throw the lifesaver on you. You've got to be proactive and say, okay, let me step into the shallow end first.
Yeah.
And let's find out how deep I can go. And so it really is, again, going back to the theme of a team. Got to consult with your team. The seller has to consult with their team. Buyer, consult with your team. We got to make sure that you're ready to go in either scenario. And as long as it fits you and it hits your goal, you're ready.
Love that. Love that. So lastly, Miss Eliana, where can our listeners find you, locate you, besides the karaoke bar?
All of them. I do a tour all the time. I'm just kidding.
So tell us, where can we contact you?
So I am located out of Ontario and Brea. Those are the main offices that I work out of for Viewpoint Lending. You can find me on social media, Eliana Home Loans. Insert here. And that is through Instagram, TikTok, on Facebook. I'm known as Eliana. As far as in-person consultations, most of mine are through Zoom or phone consultations. So I'm definitely more of a virtual girl. And that can be found on my links on my home pages of all my social media pages. I can also be contacted through text or phone. And I can definitely provide that phone number out there for those needed.
Awesome. Like I said, she's very easy to find. You will find her out there singing her little heart out. So
for you to hey.
Yes. Woo! See, thank you for being here with us today. I really appreciate your energy, and we'll see you guys on the next one.
So if your mindset is ready to excel to the next level, and you want to give up the multiple hats to a business who will support you, then schedule a call with us today. We can be reached at 626-825-8249. Please give us a review and share us with your friends and family.